Morning traders, and this is your Aussie day trade setup for today. So yesterday we ended up with a pretty much a pin bar, red pin bar. This bottom line that I've drawn in is the actual close. We've got a bit of nonsense data in here, and I think that's pretty much the range as far as I'm concerned. This was kind of on the gap close as well. So this to me is the range. If I look at the daily here, we're starting to roll over. There's a lot happening at this stage, which is indicating a potential move to the downside. Yesterday we had the Nasdaq down at 1%, almost 2% at one stage. It then sort of recovered to 0.94 down, and it's currently 0.5% down at the moment. So, which is strange because Hang Seng is flat or 0.2 up. So oil is down, which is probably driving this. Rand dollar 15.11 at the moment, pretty much where it was yesterday. 10 cents down 1% at the moment. So tech companies obviously getting a hammering at the moment. And the reason for that is really the Chinese factories that are going to be producing our products at a slower rate. Shipping has been cut. I mean, there was an article yesterday on some of the big shipping companies that have slashed their routes at the moment. So that some of them have cut their routes in half, which basically means less products coming out of China. And most of our tech products come out of China. So wouldn't be too surprised to see tech stocks and tech indexes getting a bit of a beating, and it's exactly what I think is going to happen with the Aussie today as well, because we are reliant on Nasdaq. Nasdaq is a tech company for percent purposes, so we're more than likely going to get a bit of a hammering here. So this could be a head and shoulders here as well, but I think it's more a range break. So it's a very untidy range break, and it is also, remember I showed you the diamond yesterday. We have a diamond break at the moment, and I don't think you're going to see a retest of this break. I think what's going to happen, we're going to have a gap down, maybe a bit of a rally, and then we're going to move down. And the logical targets at the moment are going to be, there's our first one, which is our first swing high, and then I would have the 200 EMA on the 3 hour in as well, which is also a fractal. Okay, so no gaps close by, so no other magnets at the moment, but I think that is the structure that we have at the moment. So we attempted to make a new high, we failed. Okay, you can see we pretty much went to the top, formed a range. And if I move that level down there, let's just get some of this noise away. So there's my fractal. You see we're bouncing around that. So I think that's the first area. Wouldn't be too surprised to see us gap below this and then come and test it and then start moving to the downside. So there's also a bit of a Brooks gap in this area as well. This zone here is something I pay attention to, but also just pay attention to your oscillators, because oscillators at the moment we've got a crossover there and then we don't, but when they're far apart like that, that also indicates a big move. Now yesterday we were expecting a bit of a gap down and we got a gap up. So and I think that was pretty much Rand driven. Close the top gap, and I suppose hindsight being a perfect science, that was an entry at the, not quite a gap close actually, that gap is still open. Put that there, so that's where we tagged, and that would have been the gap. So that gap is still open as well. So anyway, today, at the moment, we do have a bit of structure on the moving averages. So we've got the moving averages pointing to the downside. We've got price below the moving averages at the moment. So that is an indication that we do have some downside coming. We're expecting a gap down. I'm not too sure what to expect on the futures market at the moment. That is getting a bit of a hiding, but they did, especially on the Dow, we had a pretty good, their buyers stepped in off at 200, the 4 hour 200 EMA, and they stepped in quite aggressively before selling off again. So I think it's, the US markets are definitely still in an uptrend. There's no doubt about that. And I think the coronavirus is just creating speculation at the moment in the markets, which is what's driving this volatility right now. So for the Aussie, I'm tempted to say that I'm probably going to sit on the sidelines again, which is more than likely what we will be doing until we get some kind of a direction. I want to see something like this, proper direction. This sideways choppy motion is not something that I enjoy trading. But on the other side of it, I'm also looking at the structure here. Big up, big down, big up, big down, big confusion, but pretty much a M pattern. So it's up, down, up, down. That's an M pattern, and we've broken below it. So it could very well be a reversal pattern. We've got below the moving averages. Now I need to stay below the moving averages for me to be short. I think the right way to do this is going to be on a lower time frame, okay, and to also wait for that first hour or so of trading to happen. You can see there's the first hour there, very volatile, all over the place, not really much happening, and then we get to a direction and we just start drifting lower. So at the gap there was probably a good entry, and you would have had a good 400 odd points. Okay, so we're below the trend EMA on the 12 minutes at the moment, so I think that's pretty much the indication that the trend has reversed on the 12 minutes at the moment. We are below all the moving averages. So I think that's kind of the structure that I'd be playing at the moment. We're going to get a gap down, wait for the pullback, watch the 12 minutes or 10 minutes, or even the 5 minutes if you want to. But just give that first, I don't know how long this is. This is probably until 10 o'clock. That's 12 bars. So it's the first hour and a half, just over the first hour and a half, which is 8:30, 9:30, 10 o'clock. So 10 o'clock European Open. This is all South African time. That's kind of the area where you want to be looking for opportunities. I don't think the Ichimoku is going to change much for us. Trend is down at the moment on the 12 minutes, and my advice is really to stay on this chart. So either stay on this chart, look for the 10 minutes, 6 minutes, or even a 5-minute chart. But that's the chart that you want to stay on. And you can use Ichimoku for this. You can see how pretty straightforward it is. Stay as long as price is below the cloud and Kijis and Tikans, that way you're trending down. Even if we do break up the upside, it's still an opportunity to sell until these indicators start moving to the upside. A 12 minutes is just a little bit less noisy, so you don't have to stress when you've got these big bars pop up like this. Looking at the hour, we've got a bullish in the cloud, confusion, flat cloud confusion, above price bullish, so lots of mixed signals. The one that I look at here is the awesome oscillator, and you can see momentum is non-existent at the moment, so that's just an indication of confusion. And then the 4-hour is pointing up, Kijis and Tikans pointing up, cloud pointing up. That might be this last nonsense data, so this structure may change at the open. And we've also got a bit of a double bottom here. And awesome oscillator is traveling down, and we've had 3 peaks, and this is the 4th peak. So there's a bit of a mixed signal at the moment. And the daily is still bullish, but flat. In other words, ranging and confused. So pointless even looking at the higher time frames, quite frankly. What you want to be doing is just sit down, get your structure up, pick a time frame, a lower time frame, and just stick to that time frame. If you stick to that time frame, you'll be able to get tighter stops in, and you'll be able to get sort of a better trade structure working. And I think that's pretty much my take on this today. If opportunity presents itself, definitely looking to continue the short. If we do break above probably that pin bar there, that fractal there, there is an opportunity for a long, but I don't think that long is going to be very far. Probably that's the first level of resistance right there, which is 52.224. So yeah, I think that's pretty much my plan of action for today. If we do get some time to sit and watch the charts, then that's what we're going to be doing. Anyway, guys, I hope that helps. Looking for shorts, just waiting for the rebound. Shorts, if we do pop above here, I'll be looking for longs, but looking for structure very close. Anyway, hope it helps, and we'll catch you later. Cheers for now.